very dangerous pattern which Bitcoin must not form if it's going to avoid total disaster. Okay, so in this video, I'm going to show you what this pattern looks like. I'm going to show you exactly what happens when this dangerous pattern begins to form and how you can recognize it so you can avoid a total disaster situation. In other words, how you can avoid being stuck in a situation where the market just keeps plunging and plunging lower and you're stuck there making losses along the way. By the way, even though I'm going to show you what this pattern looks like so you can recognize it, I'm not making this video because I think this pattern is going to happen on Bitcoin. In fact, there's no way of knowing at the moment whether this pattern is going to happen or not. It's impossible to predict at the moment whether this pattern is going to definitely play out on Bitcoin. I certainly hope it doesn't. But I want to make sure we at least are educated enough to prepare for it. So as the saying goes, hope for the best, but be prepared for the worst. So the purpose of this video is to show you what this dangerous pattern looks like, how you can prepare yourself for it, and immediately recognize it so you can avoid a total disaster situation. And as I'm sure you'll agree, knowledge is power. Being better informed is certainly better than being less informed. Okay, so let's begin. Why do we look at patterns in the first place? In fact, why do patterns even matter? Well, let's just begin as an example. One of the most important patterns we discussed very recently about Bitcoin, as I'm sure you remember, as Bitcoin was dropping here, if you may remember from previous videos, what I said was this. I said, look, here's an important pattern that might develop on Bitcoin, which was a double bottom pattern. We've seen this double bottom formation happen on many different markets, like stock markets, gold, and yes, even on Bitcoin in the past. So when Bitcoin was coming down to its previous panic lows, so here we had the panic low on Bitcoin back in February. Then we had a rally. Then we had a retest. Okay, came very close to that panic low. And then we said, now would be the time where we might actually see a double bottom formation. And that's exactly what's played out so far. So what we're seeing so far in Bitcoin is an almost perfect example of a double bottom formation. Now, there are other patterns that I talked about before. For example, if you may remember, when Bitcoin was coming down here, when it was dropping, I said, look, pay attention to the 200 simple moving average, because very likely we might see a bounce from that level. That is precisely what happened, as we can see from there. And essentially this pattern is when price has been away or has not touched this 200 moving average for a very long period of time. When it comes back for the first time to touch it again, that level usually holds a very strong level of support and usually bounces from it. Another pattern we talked about before, which I mentioned many times in the past, is the tendency for price to come down to the 100 moving average, to the 100 EMA. Look at this. And this usually happens in a bull market, in an uptrend, when price comes back, has a correction to 100 moving average and bounces from it strongly. Again, happened again. You can see here, came to the 100 average and bounced from it. So patterns do repeat themselves a lot. So now let's turn our attention to the other pattern I want to talk about. Yes, the pattern of disaster and how you can prepare yourself before this even happens. As an example, I want to show you what happened on gold a few years ago, because I think what happened on gold is probably the best example of what this pattern, this dangerous pattern, looks like. As I'm sure you probably remember, just a few years back, gold went through this speculative phase, this massive uptrend and eventually bubble, when it went from about nearly $700 to nearly $1,900. And by the way, we knew that gold had entered this very speculative bubble phase at this point, and we knew this bubble was going to burst because almost everyone had turned bullish on gold at the time. In fact, there were seminars all over London and many other places about gold, television adverts about gold and all that kind of stuff. And let's not forget that gold investors at the time were in complete denial that it was even a bubble at the time. And of course, the rest is history. We know what happened next, because essentially that bubble eventually burst. And you can see what happened. Went from the peaks from $1,900, eventually went down all the way to about $1,100. And let me just say this, that a lot of the people who bought gold at the time, I mean, they eventually threw in the towel, and many people just started selling at the worst possible time when it was eventually about to bottom. But here's the thing. Before gold went through this major important crash you see here, it was giving you important clues. You see, it was revealing to you a very simple but also very important dangerous pattern, which many people chose to ignore. Okay, so what is this important pattern? Let me just go through it for you. And by the way, remember, even though I'm showing this pattern on gold, there is absolutely no reason why this pattern cannot happen on other markets. In fact, it has happened on other markets already. Okay, so the first thing you need to see in this pattern is a major rally, a major bull market, which eventually, of course, leads into a bubble phase, and then followed by a very strong crash. In other words, what we need to see is some panic selling that leads to a panic low. As you can see, it's exactly what happened on gold, and that became the panic low here on gold. You can see that was the peak, and here was the low. Happened in just a matter of a few weeks. So what we're going to do here is we're going to mark this level, this panic low. We're going to put a line there. Okay. Now look what happened here. It rallied. In fact, at the time, many people thought, okay, you know what? This is going to go back, and we're off to, for example, 3,000 or 5,000 on gold. That's not what happened. It had a bounce, a major rally, but look what happened next. This rally failed, and eventually we came back and retested. Take a look. We came back and retested that low again. So let's just recap. A major panic crash or panic drop. That became the panic low, followed by a rally. Then the retest. So we came back, that rally failed, retested that low. And then we formed another rally. Hence, by the way, you'll see that's actually a double bottom pattern. That became a double bottom pattern. And of course, at that point, I remember very well, many people, many commentators were saying that, you know what, this is the bottom on gold. And we're now rallying to make new highs. And off we go. I'm going to take out these highs. And off we go to, for example, 5,000 on gold. Did that happen? Well, let's see what happened next. By the way, what I'm also going to do here is I'm going to put a line at the bottom here. Just make that line at the very lows there. Okay, now look what happened next. You'll see that gold once again rallied. It tried to get something going. It tried to finally get above these highs, this resistance. But what actually happened is, well, let's take a look. By the looks of things, it actually turned out to be, yep, another failed rally. So this rally here, this second attempt to get something going and make new highs also failed. That was the first rally which failed. In fact, I'm going to color this slightly differently. It's also failed, as you can see here. Okay, let's see what happened next. And by the way, notice this low here. This low that I've marked, these lines that I've marked. This is essentially, what we're talking about here is market structure. This is major support. When the market is forming these support levels and respecting these levels, that is very important because the market is forming market structure. If you think about it, it's like the foundations of a building. We're forming a base, we're forming a foundation level, and the market must not break that foundation. Okay? Once it breaks that foundation, just like a building, if that foundation breaks, then you'd be in serious trouble. Now look what happened here. So after the second failed rally, the market, in fact, gold came back here, retests this low, in other words, touches this low again. So that would be the third time we're coming down to these lows. And again, we see a rally, but let's see exactly what happened next. All right. Oh, so there we go again. Now another rally. And I have to tell you that, again, when this rally was forming, the ideas and certainly the theory was that off we go. This is going to be the major rally. We have to now break this high, and we're now have to go to, 2,000 gold and eventually 5,000 on gold. So let's see what happened next. Did we manage to get finally this rally succeeding? And as you can see here, gold came back to these previous levels. This was resistance. Okay. But failed once again to get anything going to the upside. Again, it failed. So what happened? Well, as you can see here, once again it dropped. And what happened here? Let's see. Okay, comes down again. Just comes down. In fact, let me just drag this back a bit so we can see it more clearly. Now, pay very close attention to that low that we formed here on gold, okay? But look what happened. Here we go. Now, this is what happened here on gold. When finally, in April 2013, it broke below and closed below that major support, that market structure. In other words, in April 2013, for the first time, gold broke market structure. And I mentioned this before in previous videos, that when markets break market structure, when they go below that level, that foundation level, that market structure level, that is a very critically dangerous thing for that market to do. And I'm sure you know what happened next. When it broke that level, it then continued to drop much further. Now, it had a bounce, sure, but I mean, you can see what happened next here just by looking at the chart. And again, pay attention to that low, to those levels, to those lines. It continued to drop. And then it just continued to drop lower and lower. Now, you're probably thinking that this break of the market structure, that was the first initial sign of a bear market. In other words, a major crash on gold. No, actually, that's not correct. In fact, there were much more important clues before that break. Let's just examine what they were. So let me just show you what those important clues were before we even broke that support, before we broke that market structure. You see, one of the most important signs that a market's going to break a critical support level, in other words, an important clue that a market could actually break its support level or market structure, is what's called failed rallies. And as I've already said in this video, gold tried to get something going, tried to come and make new highs. It did not do that. It failed. And again, that was the first failed rally. What did it do? For a second time around, gold tried to make another high, tried to come make new highs. It failed again. That was a second failed rally. And again, we can see over here, try to make a third attempt. That also failed, another third failed rally. So all these failed rallies were giving us important information, that there were too many sellers in this market, that supply was overcoming demand. And essentially those failed rallies, the failed attempts to make new highs, those were good enough clues that this market was very likely heading for a bear market. Now, fortunately, we've not yet seen any patterns like that happen on Bitcoin, but it does not mean that it won't happen. And again, I'm not saying that these patterns, this particular dangerous pattern is going to happen on Bitcoin. Nobody can possibly know that. It is impossible to predict that at this stage, whether that's going to happen on Bitcoin. But the good news is that if we can recognize these patterns, if we can recognize them in advance, then we can be better prepared to avoid major risk. And of course, major risk of any potential losses, major losses. So what we want to do here, guys, is we're going to mark these levels. There's the first low. So again, just like I showed on the previous charts, this would be our major bull market phase, followed by the major crash, okay, the major drop there. And as you can see there, that would be our first panic low. There it is, as we know by now, just near the 6,000 level there. Then we had the first rally. Now that failed, and we know it's a failed rally, okay? And we're going to put a marker on that level as well. We're going to mark this low here as well. So that becomes our base now. So remember, this is our base, okay? This becomes our foundation level, okay? And remember, the foundation must not break for the structure to remain intact. All right. So the Bitcoin market must now respect this foundation level that it's forming here. It must respect market structure. So let's just say, for example, that Bitcoin manages to make another rally here. Okay. And again, we're just speculating here. Let's say, for example, that this rally also failed. Okay. So let's say it came up to these levels and this rally also failed to get anything going, comes down to this support level and then makes another bounce. Okay, let's actually color that differently. There's our bounce. Okay, now this bounce must finally break through resistance. So here's the thing. What needs to happen, what we need to see is finally breaking through. Let me just draw a line here on my chart. So what we need to see on Bitcoin for this pattern not to repeat, well, firstly, we must not see failed rallies. Now, we've already seen one failed rally right over here. But the second attempt, we need to see the second attempt finally breaking through that resistance level. Because again, remember, if Bitcoin comes up to that resistance, and again, if it fails to get above that, if we see another failed rally, then that could essentially be one of the first initial signs of this dangerous pattern repeating on Bitcoin. Remember, when a doctor examines their patient, what are they looking for? You know, when they examine your chest, when they take your blood pressure, the doctor is looking for signs or clues that they can determine whether there's something wrong. So in a way, that is what we're trying to do here. We're trying to examine the health of the market. And like a detective, we're looking for signs and clues of any potential weakness or strength in the market. Because if Bitcoin breaks that support, if it breaks market structure, all I have to say is brace for impact. Because we're heading significantly lower. The one thing that Bitcoin must not do is failed rallies followed by break of market structure. Because if it does that, again, as I mentioned before, brace for impact, that could certainly be a very dangerous outcome and a potentially disastrous outcome for Bitcoin.